A particle physicist walks into Wall Street with nothing but a PhD and a different way of thinking. 30 years later, he's worth 8 figures and still trading. But here's what nobody tells you about his story. He didn't beat the market, he decoded it. He found the hidden language that the market speaks, and once you understand what he discovered, you'll never look at a chart the same way again. While you're staring at candlestick patterns, trying to predict the next move, he discovered something hidden in the market's code. Something that changes everything you think you know about trading. Something that explains why 95% of traders fail, while a small group consistently extracts money from the markets year after year. This is the story of Samir Varma, PhD in particle physics from one of the world's top universities, 8-figure futures trader who's been consistently profitable for 3 decades, and the man who cracked what most traders never even knew existed. His journey from hunting subatomic particles to hunting market inefficiencies reveals the exact mental framework that separates professional traders from everyone else. What he found in the data will make you question every trade you've ever made, every indicator you've ever trusted, every pattern you thought you saw, and most importantly, it will make you question every trade you're about to make. Because the market isn't what you think it is. Stay until the end of this video, because the psychology behind his discovery is the real edge, not the algorithms, not the math, the psychology, the way he trained his mind to think. And I'm going to break it down for you step by step so you can start applying it immediately. Before Samir Varma ever looked at a stock chart or a futures contract, he was hunting for something far smaller and far more elusive. Subatomic particles, the building blocks of reality itself. He spent years in laboratories surrounded by the most sophisticated detection equipment on Earth, searching for particles that exist for fractions of a second. He worked at the cutting edge of physics, where the smartest minds in the world were trying to understand the fundamental nature of the universe. And in that environment, he trained his mind to do something that most people never learn. He learned to see patterns in what looks like pure chaos, to find signal in overwhelming noise. But here's what most people don't understand about physicists and why their minds work differently than everyone else's. They don't just study nature, they don't just memorize formulas. They learn to think in probabilities. They learn to accept uncertainty as a fundamental feature of reality, not a bug to be eliminated. In quantum physics, every particle, every interaction, every outcome exists as a probability until it's measured. Nothing is certain. Everything is a distribution of possible outcomes with different likelihoods. And Samir internalized this way of thinking so deeply that it became his default mode of processing reality. And that single shift in thinking, from prediction to probability, from certainty to likelihood, from being right to playing the odds, that's where most traders fail before they even begin. They come to the market looking for certainty in a system that fundamentally cannot provide it. But Samir didn't just bring probability thinking to the markets. He brought something far more dangerous and far more valuable. The ability to see hidden structures that exist beneath the surface of what everyone else is looking at. Structures that most traders don't even know exist. When Samir first looked at financial markets, he didn't see what you see when you open your trading platform. He didn't see candlesticks and moving averages and RSI indicators. He didn't see support and resistance levels. He looked past all of that surface-level information. He saw data. Raw, unfiltered, unprocessed data. Millions of data points streaming in real time. And in that data, buried beneath layers of noise that would overwhelm most people, he saw something that changed everything he thought he knew about how markets work. The market wasn't random. It wasn't efficient, like the textbooks claimed. It was being manipulated. But not in the way conspiracy theorists think. Not by some shadowy cabal pulling strings. It was being manipulated by the natural behavior of large institutional players who have to move massive amounts of money. Samir discovered what he calls iceberg orders. These are massive institutional trades, sometimes hundreds of millions of dollars, that are hidden beneath the surface of the market. Only a tiny fraction of the order is visible at any time. The rest is hidden, invisible to retail traders, executing slowly to avoid moving the market. These hidden orders create patterns in the data, footprints that most traders never see because they're not looking for them. They're too busy watching candlesticks and drawing trend lines. But once you know these footprints exist, once you train your eyes to see them, you can't unsee them. They're everywhere. Here's the psychology lesson that most traders need to hear. Most traders are playing checkers, while institutions are playing three-dimensional chess. And the retail traders don't even know the game has changed. They're using tools and techniques from decades ago, while the professionals have moved on to entirely different methods. Your brain is wired to see patterns. That's evolution. That's millions of years of survival instinct that helped your ancestors spot predators in the grass and find food in the forest. But your brain is also wired to see patterns that aren't there, to find meaning in randomness, to create narratives that explain noise. And that's the trap that destroys traders. Samir's physics training taught him something crucial that most traders never learn. You don't trust your intuition when dealing with complex systems. You don't trust your gut feeling. You trust the data. Always the data. You let the numbers tell you what's real and what's illusion. But here's where it gets really interesting. Knowing that the market is being influenced by hidden institutional orders isn't enough. That knowledge alone won't make you money. You need to know exactly how to use that knowledge, how to position yourself on the right side of those massive flows. Samir built algorithms, but not the kind you can buy from some guru online for $99. Not simple moving average crossovers or RSI signals, real algorithms based on particle physics principles. Algorithms that use the same mathematical techniques used to detect particles that exist for billionths of a second. He applied signal processing techniques that were developed to detect subatomic particles in massive amounts of noise, to detect institutional order flow in massive amounts of market data. The same math that finds a needle in a haystack of trillions of data points can find the footprints of institutional traders. Think about this. The same mathematical techniques that can find a Higgs boson, a particle that exists for less than a trillionth of a second, in trillions of collision events, can find institutional footprints in the noise of market data. That's the level of sophistication we're talking about. And for 30 years, this approach has worked, consistently, year after year. While most traders blow up their accounts within the first year while 95% fail, Samir compounds his returns. Not because he's lucky, not because he has inside information, because he thinks differently. But here's what separates Samir from every failed quant, every blown-up hedge fund, every algorithmic trader who thought they had it figured out. He understood something about psychology that most scientists completely miss, something that has nothing to do with math. The algorithm isn't the edge. Let me say that again because it's the most important thing you'll hear today. The algorithm is not the edge. The edge is the ability to trust the algorithm when every instinct in your body, every emotion in your mind screams at you to override it. Most traders who build systems, who create rules, who develop strategies, they abandon them at the worst possible moment, right when the drawdown feels unbearable, right when the losses pile up, right before the system would have saved them and made back everything they lost plus more. Samir's physics background gave him something invaluable that most traders will never have unless they consciously develop it. The ability to completely separate emotion from execution. To treat trading like a scientist treats an experiment. No ego, no attachment to outcomes, just process. Now, you might be thinking, I'm not a physicist, I don't have a PhD, I can't build sophisticated algorithms, I don't have access to the tools and data that Samir has. But that's not the lesson here. That's not what I want you to take away from this story. The lesson is about how you think, not what tools you use, not what indicators you have on your chart. Samir's edge isn't his PhD, it isn't his algorithms, it isn't his data feeds, it's his mental framework, the way he processes information and makes decisions. First principle that you need to internalize. The market is not random, but it's also not predictable. It operates on probabilities that are influenced by hidden forces you can't see directly. Your job is not to predict. Your job is to identify favorable odds and position accordingly. Second principle, your job as a trader isn't to be right. It's to identify when the odds are in your favor and act accordingly. Then accept whatever outcome occurs without emotional attachment. Being right on any single trade is irrelevant. Being right over hundreds of trades is everything. Third principle, emotion is the enemy of edge. The moment you feel strongly about a trade, positively or negatively, you've already lost your advantage. Strong feelings mean your survival instincts have taken over, and survival instincts are terrible at trading. Samir once said something in an interview that stuck with me, and I think about it every time I trade. He said, "The market doesn't care about your story. It doesn't care about your bills or your dreams or your ego. It only cares about your position. That's it." Most traders bring their ego to the market every single day. Their need to be right, their need to prove something to themselves or others, their need to feel smart, and the market destroys them for it. The market is the ultimate ego destroyer. It doesn't care how smart you are. Samir approaches trading exactly like a scientist approaches an experiment. No ego invested in the outcome, no attachment to being right, just hypothesis, test, and result. If the hypothesis is wrong, you update it. You don't defend it. You don't rationalize it. You update it and move on. Let me break down exactly what this looks like in practice. Because theory without application is worthless. Knowing these principles intellectually means nothing if you can't implement them when real money is on the line and your emotions are screaming at you. When Samir sees a potential trade setup, he doesn't ask himself, will this work? Will I be right? He asks completely different questions. What are the probabilities based on the data? What's my edge in this specific situation? What's the expected value of this trade over many iterations? He quantifies everything before he enters. Entry probability, exit probability, risk-reward ratio, position size based on account risk, maximum drawdown acceptable. Nothing is left to feeling, nothing is left to intuition. Everything is a number. And here's the key that most traders miss. He accepts losses as part of the equation, not emotionally, which is what most people try to do. Mathematically, losses are just negative data points in a larger distribution. They're expected, they're planned for, they're not failures. But there's something else Samir discovered in his decades of trading. Something about the psychology of the market itself that most traders never grasp because they're too focused on their own psychology. The market has a psychology too. The market isn't moved by logic or fundamentals or technical analysis, not really. It's moved by the collective psychology of millions of participants all acting on their own fears and desires. Fear, greed, hope, despair. These emotions aggregate into price movements. And here's what the institutions understand that retail traders don't. They know this. They use it. They create fear to accumulate positions cheap. They create greed and euphoria to distribute positions at the top. It's a psychological game being played at massive scale. Samir's algorithms don't try to predict price directly. That's the wrong question. They predict behavior. They identify when the crowd is about to panic, when euphoria is reaching unsustainable levels, when fear has created opportunity. They trade the psychology, not the price. And that's the real secret that changes everything. You're not trading against the market. You're not trading against some abstract force. You're trading against other traders' psychology, their fear, their greed, their mistakes. That's your edge. So, what does this mean for you practically? How do you apply a physicist's mindset to your trading without having a physics degree, without building sophisticated algorithms, without access to institutional-level data and tools? Step 1. Stop trying to predict what the market will do. Start thinking in probabilities instead. Every trade you take is a bet with odds, not a certainty. You're not trying to be right. You're trying to have positive expected value over many trades. Step 2. Quantify your edge. If you can't express your edge in numbers, if you can't tell me the win rate and the average win versus average loss, you don't have an edge. You have a hope, and hope is not a trading strategy. Step 3. Remove emotion from execution completely. Build rules before you trade. Follow those rules during the trade. Trust those rules even when it hurts, especially when it hurts. That's when the rules matter most. Step 4. Accept losses mathematically, not emotionally. They're not failures. They're not reflections of your worth as a trader or a person. They're the cost of doing business, the price of playing the game. Budget for them and move on. Now here's where most people stop. They hear these principles, they nod their heads, they feel inspired for a few hours, and then they go right back to emotional trading the next day. Why does this happen? Why can't people change? Because knowing isn't enough. Your brain is wired for survival, not for trading, and survival instincts that kept your ancestors alive are actively working against you in the market. Your brain doesn't know the difference between a losing trade and a lion attack. When you're in a losing trade, your brain screams at you, hold, don't take the loss, it might come back. That's your survival instinct trying to avoid the pain of loss. And in trading, that instinct is dead wrong. It turns small losses into account-destroying disasters. When you're in a winning trade, your brain screams, take the profit now, before it disappears, lock it in. That's also your survival instinct, grab the food before it runs away. And in trading, that instinct is also wrong. It cuts your winners short and destroys your edge. Samir's advantage isn't that he's smarter than you, it's that he trained himself over decades to override these instincts consistently, every single trade, for 30 years. That's the real skill, that's the real edge, the ability to not be human when you need to be a trader. How do you train this? How do you develop the ability to override millions of years of evolution? The same way Samir trained in physics, through repetition, through process, through discipline, through doing it wrong and learning from it. You don't become emotionally detached from trading by wanting it or by reading about it. You become emotionally detached by practicing it, trade by trade, decision by decision. Over months and years, there are no shortcuts. Start with position sizes so small that losing doesn't trigger your survival instincts. So small that you genuinely don't care about the outcome. Then slowly, gradually, as your discipline strengthens, increase your size. Build the skill before you build the risk. Journal everything, not just your trades and your profit and loss. Journal your emotions, your thoughts, your impulses, what you wanted to do versus what you actually did. Know your enemy. Your enemy is yourself. Samir didn't crack the market in a day or a month or even a year. He spent years failing, learning, refining and failing again. That's the real algorithm. That's the real secret. There is no shortcut. There is only the work. The algorithm isn't code. It isn't a formula. It isn't a secret indicator. It's mindset. It's the systematic, disciplined, probability-based approach to thinking that separates professionals from amateurs, and it can be learned. Let me tell you what happens to traders who don't learn this, who hear these principles and ignore them, because you need to see the alternative clearly. You need to understand what you're choosing between. They chase trades. They revenge trade after losses. They double down on losing positions. They cut winners short and let losers run. They blow up their accounts. They fund new accounts, and they blow up again. The same cycle, repeating endlessly. And the worst part? They know better. They've read the books, they've watched the videos, they can recite the principles from memory. But knowledge without implementation is completely useless. It's worse than useless because it creates the illusion of competence. Samir's edge is implementation. He doesn't just know the principles intellectually, he lives them. Every single day, every single trade, every single decision. The principles aren't something he thinks about, they're something he is. So here's your choice, and it is a choice. You can watch this video, feel inspired for a day or a week, and then go back to your old patterns, back to emotional trading, back to the cycle. Most people will choose this path. Or you can take one principle from this video, just one, the one that resonated most with you, and implement it starting tomorrow. Not perfectly, not completely, just consistently. One principle, one change, one step. That's how Samir built his edge, not all at once, not in a flash of insight. One principle at a time, one trade at a time, one day at a time, compounding small improvements over decades into something extraordinary. The market will be here tomorrow, and next month, and next year. And in 10 years, you have time, but only if you start now, only if you begin the process today, because the best time to plant a tree was 20 years ago. The second best time is now. Samir Varma didn't become an 8-figure trader because he was born smarter than you. He didn't have some genetic advantage. He became one because he learned to think differently than you currently think. And thinking is a skill that can be developed. And thinking differently isn't a gift that some people have and others don't. It's a skill you can develop through practice and repetition and discipline, starting today, starting with your next trade. The physicist who decoded Wall Street didn't find a magic formula that prints money. He found a way of thinking, a mental framework, a systematic approach to decision-making under uncertainty. And now you have access to that same framework. Probability over prediction, data over intuition, rules over emotion, system over ego. That's the code. That's what Samir cracked, not some secret market formula, a way of thinking that gives you an edge. The question isn't whether this approach works. Samir proved it works. 30 years of consistent returns proved it works. The question is whether you'll actually implement it, whether you'll do the work. Most people won't. That's why most people fail. But you're still here. You watched this entire video until the end. That already makes you different from 90% of people who clicked on this video. If this video changed how you think about trading, even a little bit, do me a favor. Hit that subscribe button right now. I break down the psychology behind successful trading every single week. The stuff that actually moves the needle. The stuff that separates winners from losers, not indicators, not patterns, psychology. And hit that notification bell so you don't miss the next one. Because the algorithm buries content. Don't let it bury your edge. Drop a comment below and tell me which principle resonated most with you. Was it probability thinking, quantifying your edge, removing emotion? I read every single comment and I want to know what clicked for you. And if you know a trader who needs to hear this message, share this video with them. This could be the video that finally breaks them out of the cycle. That changes everything for them. Remember this, the market doesn't reward the smartest traders. It doesn't reward the hardest working traders. It rewards the most disciplined traders, the ones who can control themselves. Samir Varma proved that for 30 years. Now it's your turn to prove it to yourself. One trade at a time, one day at a time, one principle at a time. I'll see you in the next video. Until then, trade the probabilities, not the predictions. That's the edge. Peace.